Conversations with My Real Friends. I'm Jennifer. I'm here with my friend John.
Hello,
Hi, John.
good to see you.
So John is in
here.
the mortgage industry, and today we are going to be talking about FHA. So in mortgage, there's all these acronyms, right? We throw them around like candy, right? So what does FHA stand for, and who's a good candidate for an FHA loan?
FHA is a Federal Housing Administration.
Right.
And what it is, it's a government-backed loan.
Okay.
And it is magic. And the reason why FHA loans are magic is that, number one, it only requires 3.5% down, which is really cool.
Yep.
And the FHA rates are much lower than conventional.
Okay.
So a conventional might be at 6.125, FHA may be at 5.5.
Wow.
So it's a really significant difference. For every percent that the rate goes down, another 5 million people qualify.
Right.
So that's really a big deal. Now, with FHA financing, there's also mortgage insurance.
Okay.
And the mortgage insurance is pretty well set, and it especially is really good for people with lower credit scores.
Got it.
Now, Jennifer, this is really a big deal,
Yeah.
and that's probably the most important thing about FHA financing, is that you don't have to have perfect credit.
Got it.
People get the idea that in order to buy a house, you have to have perfect credit. And with conventional financing, if you're putting down a small down payment, then maybe it's 3%, maybe it's 5%,
Right.
you know, the rate is going to be okay. But if your credit score is high, then you're going to have low mortgage insurance.
Right.
Right? So that's great. The problem with conventional financing is if your credit score is low, your rate will be a little bit higher, but your mortgage insurance is going to be really high.
Right.
Right? And so you want to, when you do an analysis, we do an analysis with our clients to say, is it better to do FHA or conventional?
Right.
We just did a loan that we put into escrow that went into escrow, and we did a very deep dive analysis. Is conventional better or is FHA?
Right.
And it came out to where FHA was a lower overall payment.
Right.
And as a result, that's the way they wanted to go. Now, when you do FHA, you're going to have your monthly mortgage insurance. FHA also charges an upfront mortgage insurance.
Okay.
And so what that does is they made FHA, when they created it, they said we want it to be a self-policing fund against defaults. We don't want to have to go to the taxpayer to bail it out. And so as a result, you pay upfront mortgage insurance, which is added to the loan amount, so you don't have to come in with any additional down payment.
Right.
It's still 3.5% down. The beauty is it allows you to get in at a lower down payment, a lower credit score, and it also allows you to be able to get into a property at a higher debt-to-income ratio. In other words, where it might be with a conventional loan, 50 cents or 49 cents out of every gross dollar has got to go towards, you know, as high as they'll go. Right? But with FHA, they'll go as high as 57%.
Oh, wow.
Now, some people say, well, that's irresponsible lending. No, it's not irresponsible lending as long as you qualify, because the track record of FHA is really high. People make their payments. And a lot of times they have income that we can't count. They get gifts from parents. They get income coming in. They get a renter. I mean, all sorts of things happen. And so it really is a great opportunity to take advantage of it if it's right. It's not for everybody, but it's a deal for a first-time home buyer especially that should really be looked at. In fact, we even just did a refinance for somebody, and they had a credit score of 580.
Oh, wow.
580, you know, that's considered a low credit score. Well, but we still got her approved with FHA financing on a cash-out deal. It'll allow her to pay off all of her debts, and then she'll be able to get her credit score much higher and get in a position so at some point she can refinance out of that. With FHA, that mortgage insurance stays all the way through the loan. So at some point you want to plan to refinance it.
Are there income qualifications or other things to get onto a FHA loan?
No, they're about the same as conventional. In other words, they count the income about the same as they would conventional. They just allow for a higher debt to income.
Got it.
Right, so you don't have to make as much money. They allow for lower credit scores. They really kind of put the polish on it for you on something that you wouldn't think would work.
Got it.
And that's really what it does.
Perfect.
Yeah.
So if there's someone out there who wants to look at lending and maybe an FHA loan, how can they reach out to you?
Well, just email me or call. Email is John, John, at mainstreetloans.com, or you're welcome to call my direct number at 805-432-2382, whichever way is best for you. And we'll go through it and talk about FHA. We'll talk about conventional. We'll give you an example of what the payments are like and how it best suits you and what will be best for you.
Great. Thank you for joining me,
You're
John.
welcome.
And thank you for joining us for this episode of Conversations with My Real Friends. We'll see you soon.